Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, we know that there was a lot of anxiety leading into today. Very big day for the markets. Jerome Powell with a Federal Reserve interest rate decision, which saw a pause in the interest rate cutting cycle. And after that, we also had big tech earnings coming in, some of them before the bell, such as ASML, and after the bell, such as the likes of Microsoft, Meta, and Tesla, just to name a few. So, of course, guys, a lot of volatility in the markets today. However, the SPY and the QQQ did not move the needle that much. The expected move was about 1%, 1.5%, 1% on the SPY, 1.5% for the Qs, and we came in largely under that expected move. So all in all, the market's absorbing the volatility and absorbing the catalysts quite nice. And now we can say, guys, that we are almost through all of the volatility catalysts that we were describing earlier in the month of January. We are through all of the jobs reports for the month. We are through the inflation reports for the month. We are through the Trump inauguration and the flurry of possible executive orders that came in the first week of the administration. We are now through Jerome Powell and the pause, and happy to say we are now also through half of the big tech earnings cycle as a whole. So all in all, guys, all the volatility catalysts for the most part are now behind us. So can we possibly be embarking on a more smooth and conservative style of a market leading into February and March? Well, that's what we're going to look into today, of course. So in today's video, guys, a ton of things to cover. We'll be going over number one, a recap from the Federal Reserve meeting. What did Jerome Powell say to reporters, answering questions, and the results of the Federal Reserve interest rate pause. Thereafter, guys, we're going to take a look at several big tech earnings that I have prepared for you guys. And I'm going to cover 4 different companies, but we will do them in rapid fire format. 4 or 5 minutes per company: ASML, Tesla, Meta, and Microsoft. So apologies, I won't be going extremely deep as per usual, but we will do a good recap of what exactly was said for these companies in their earnings respectively. Thereafter, of course, we have to cover the technical analysis of the major market indexes and some of our big tech names after today's earnings, of course, and see where the whole picture stands. And lastly, guys, no portfolio update today. That will be on the Friday session for the whole recap. So a lot to cover today's video, guys. Let's jump right into the action, shall we? So the SPY down today about 0.45%, the Qs down about 0.19, and all across the board, the market was a little bit weak today. Take a look at the heat map here. You will see that, yes, there was some damage across big tech, NVIDIA leading to the downside, but overall, guys, I would say that advancing declining was roughly mixed across the day. A lot of anxiety, a lot of tensions coming into the Fed meeting, and also for the big tech earnings. So we did have a fairly muted and somewhat turbulent day in the markets without moving too much, but there was a lot of money sloshing around between different sectors. You can see that even better on the heat map, one day relative. Some sectors were in the green, but to the downside led by real estate, technology, and healthcare. On the 1 week, where do we stand, guys? Once again, a fairly mixed and balanced market in terms of rotation. Half of the market up, half of the market down. Now that we're through a lot of the volatility catalysts, can we maybe see a clearer picture and more smooth price action without so much volatility? Yes, quite possibly, but we're not all that through just yet. Tomorrow, I'll remind you, we have GDP coming out before the open, and on Friday, we have PCE, the preferred inflation gauge from the Federal Reserve. That's what they look at most closely. So 2 little elements remaining this week. And then thereafter, next week, of course, we have earnings. Well, tomorrow, number one, we have earnings from Apple, Visa, and MasterCard. Those are probably going to be the biggest ones of the day. Sorry, Intel. And then next week, guys, the biggest ones of next week, of course, have to be Amazon and Google. And that's it, pretty much. We are now halfway through earnings season. We've made it through nicely. The bank earnings were good so far. And for the most part, big tech earnings have been quite good in terms of the quarterly numbers as well. So I'm happy to say, guys, we possibly might be moving to an atmosphere where we don't have so much in terms of pressure every single week, data releases, earnings, and stuff like that. So happy to say that we are almost through the turbulent storm that was the month of January. I was saying on the channel end of December that January could be a volatile month, big upswings, big downswings, and I don't think that has disappointed so far. So before we get into more technicals, guys, let us do a quick little recap here of exactly what Jerome Powell said. I'll go over the main points of the article and then a few notes that I took myself. So Powell says central bank is in no hurry to cut interest rates again. Of course, they came out with a pause, which was the expectation leading into the meeting, 99% probability of a pause, and indeed we did get a pause. But all was in the tone of Jerome Powell today. Was he going to be hawkish to us like in December, or was he going to be a little bit more dovish? And as a matter of fact, today he was dovish, kind of sidestepping the questions that would have have led to a lot of volatility, namely around the tariffs that the Trump administration is going to do. Let's jump into the main points and then I'll get to my notes as well. Policymakers warned that inflation remains somewhat elevated, so still in the right direction, but somewhat elevated. Jerome Powell emphasized the central bank is in no hurry to adjust its policy stance, particularly as the economy remains strong. Now, the range of possibilities for tariffs, Jerome Powell said, was very, very wide. The range of possibilities is very wide. We don't know for how long or how much or what countries, talking about the tariffs. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. The best we can do is do what we've done, which is to study up upon this and look at the historical experience, read the literature, and think about the factors that might matter. This was a very good answer from Jerome Powell, kind of sidestepping the question as a whole, not really putting himself at odds with the new Trump administration, just saying, listen, we're going to see what happens, and if anything happens, the Fed largely has the tools to be able to counteract any forces coming in that the new administration might cause. He did not say that, but you had to read between the lines, and that's pretty much what the moral of that story was. Now, in terms of being question whether or not he had contact with Trump, because we know Trump has been pressuring indirectly to make interest rates come down, Jerome Powell said he had no contact with Trump since the president took office last week, and after Trump demanded that interest rates drop immediately. Powell said, I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. This is the answer that everybody was looking for in December. Not so much projecting higher because of possibly what the new administration was going to be doing. So once again, dodging the question as best as he can and giving a very firm answer that there's been no contact. Now, real progress on inflation needed before policy changes are made. Talking about furtherance of the interest rate cuts, Powell said that the central bank will need to see real progress on inflation or some weakness in the labor market before we consider making adjustments. In other words, he is saying his policy stance right now at 4.3% for the short-term yields is pretty much picture perfect. If you see a deterioration in inflation, they have the policy tools to react, which is just staying firm at the current level, or maybe even some hikes. He did not hint at that, but that would be the appropriate response if we see a large spike in inflation. However, if the jobs market starts to dwindle, they also have ample opportunity to cut interest rates in a fast way to stimulate the economy. The Fed is sticking to the 2% target. The committee's 2% inflation goal will be retained and not be a focus of the review. He gets asked every single meeting in the last 3-4 meetings, guys, is the Fed going to move their 2% target, or are they going to stay firm, considering the fact that inflation's been sticky around 2.5%? Some people say, well, maybe they should raise the target to 2.5 if it's just sticky. Powell saying, nope, that's not the way we operate. We're sticking it at 2. With our policy stance significantly less restrictive than it had been, talking about rates being lower than they were at this time last year, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. Reiterating, guys, Jerome Powell, the economy is very strong. The labor market is strong as well. They're making good progress on inflation. As a result, they see no need to be in a rush to drop interest rates unless something meaningful happens with the jobs market or the inflation overall. So that is the summary from the article. Now let's jump into a few key notes that I did take down. So he was asked whether the economy was, the jobs market was strong and stable. He did say the economy was strong. Now, he did also say we're in a low hiring environment, but there's no mass layoffs. Hiring rates have come down, sustainable levels of employment, but they don't need to cool off the labor market anymore, referencing the hot jobs market of 21 and 2022. Talking about immigration policy and uncertainty surrounding the deportations. Now, they're saying businesses dependent on immigrant labor are saying anecdotally harder to find people, but we do not see it in the data yet. This is one little tiny red flag hinting at the data being lagging. So we're going to have to take a close look at this, but so far nothing in the data. More on deportation. Powell, the job creation has come down, but deportations are also rising. As such, the unemployment rate should stabilize. As such, flat unemployment rate, although we have deportations. Meaning, well, listen, if the job creation is not there as much as it was, talking about the JOLTS jobs openings report, but then again, there's less people looking for work because we have less possible illegal migrants, well, it kind of counteracts itself. So that was the logic that Jerome Powell was utilizing when he answered that question. Any upside risks to inflation because of Trump's policies? No speculation from Powell. Unsure what will happen, which is what we just read. They're patiently waiting to understand, not in a hurry to project any policy changes right there. We were also saying, will tariffs will affect U.S. economic output or trade relations? Powell literally said it's not our job, but they're not observing any meaningful impact on financial conditions from the foreign investment standpoints. So all in all, guys, it was fairly good. There's a few more questions and answers here that I'll kind of spare you, but the moral of the story is the same. They're very confident in the policy. The policy is stated to be restrictive enough, despite the rates moving up on the long end, talking about 10 and 20 year, but no adjustments are required yet by the Federal Reserve at all. He keeps reiterating the policy is well positioned as a whole, guys, and that the economy is strong. So he did tackle deportation, said it wasn't an immediate impact on the markets right now when measuring versus job openings versus workers being lost through deportation, addressed that the economy is healthy, addressed that the jobs market is still indeed very stable. Despite being in a low hiring environment, we are not seeing any massive layoffs. And as a whole, guys, in terms of interest rates, as I said, the policy is restrictive enough. So all in all, a very decent meeting from Jerome Powell. He spoke with confidence. He spoke in a sure fashion that the economy was on strong footing and reiterated that the Fed has the tools necessary to either counteract forces of a weakening labor force or rising inflation. So a very good meeting from Powell overall, and the markets reacted well, as they kind of should have. Not mooning because he didn't say anything overly dovish, but also not nuking to the floor because he also didn't say anything tremendously hawkish or bearish. So right in line with what he should have done. It was a very good speech in my opinion, much better than the one which led to a lot of uncertainty in December. So that is a summary for Jerome Powell. Hopefully you guys enjoyed that. Sorry for keeping it a bit long. Now let's get into the juicy stuff, the earnings. Oh, these good earnings. And we're going to start it off with ASML. So ASML, guys, coming in before the morning today with their earnings, of course, and they came in and they did absolutely do a good job. Beat on EPS by 1.41, and they did beat on revenue by 1.17 as well. Of course, ASML has gotten hit pretty hard recently, as there was some, anxiety surrounding whether or not the firm would be able to uphold the demand that it saw in years prior, moving forward, talking about the refresh cycle. Will companies still be ordering these $400 or $500 million machines? And the answer largely, guys, is absolutely. ASML shares jump as surge in orders defies fears of DeepSeek hitting AI chip demand. Let's read into a little bit of the article, then dive right into the analysis. There's a big jump in fourth quarter net bookings, suggesting strong demand for its advanced chip making tools, even as DeepSeek low-cost model raises concerns over AI spending. Now, the net profit was very good, 2.69 billion euros versus 2.64. That was a quite healthy profit margin. We'll get into that a bit later. ASML said that net bookings came in at 7.09 billion. That is up 169% from the third quarter and exceeded the 3.99 billion euros expected by analysts. So building more of a pipeline of backlog of revenue, substantial beat on that guidance, or on that number rather, for the backlog for ASML. 2025 full year sales outlook remains unchanged from its previous guidance of between 30 to 35 billion euros of total revenue. So not increasing guidance, this is lowered guidance from last quarter, which made them drop 20%, and they're reiterating the same guidance, however, increasing their backlog. But keep in mind, guys, it takes them over a year for when they get an order for one of these machines to then deliver it to the customer, so that revenue is not recognized in 2025. This revenue uptick in backlog that we just saw, the net bookings, right? Moving on to the DeepSeek concerns. Here's what the CEO had to say. He struck a positive note on the arrival of low-cost AI models such as DeepSeek, telling CNBC he expects this development to drive more demand for semiconductors, not less. Satya Nadella from Microsoft said this exact same thing. Jensen Huang said the exact same thing. OpenAI founder Sam Altman said the exact same thing. And now the ASML CEO is saying the exact same thing. These are industry leaders, guys. And they have the concrete knowledge of what's probably going to happen. So if they're saying it's going to increase demand, I would tend to give them the benefit of the doubt. While he declined to comment on specifics with the DeepSeek R1, he said that he sees no sign of a slowdown in demand for AI-focused chips. A lower cost of AI could mean more applications. More applications means more demand over time, and we see that as an opportunity for more chips demand overall. Now, talking a little bit further, there is a lot of discussion in the industry surrounding DeepSeek, but the CEO hasn't heard from customers asking about the impact of Chinese firms' model on chip demand. So no customers backing out of deals at all for ASML, so soothing a little bit of concerns. Now we do have a little bit of a slowdown in demand. They brought forward a ton of demand in 21 and 22, guys, and now that demand is now normalizing. We had a huge backlog in China at the end of 2022, and then this has kind of been absorbed as of last year. ASML is going to return to a more normal demand ratio in China compared with other markets this year. We expect the ratio of our business in China to be lower than what it has been for sure in 23 and 24, but they do not export the most advanced lithography machines to China. So all in all, guys, a very decent report, alleviating some of the fears surrounding the order backlogs overall, guys. Take a look right here. Their net income number was very good, 26.7%, which is roughly in line when we take a look at ASML's net margins the last few years, guys, mid-20s to 30%. So that is roughly in line with what we're looking for here. The gross margin as well at the low 50 percentile mark. That is traditional with what ASML has been putting out since 2021. Top line gross margins operating the same, and net margins, as I showed you guys, is still about 26-27%, as I showed you right there, or my big head's in the way, sorry. 26.7%. So very good net margin maintenance, very good backlog expansion. Overall, guys, very healthy quarter from ASML. Now, overall, guys, in terms of where we stand in terms of the fundamentals, revenue growth and EPS growth, very solid. That gives them a valuation at 716 of a 29.74 PE. Not the worst. And when we divide that by their EPS growth rate, we get a PEG of 1.75, which is okay. The free cash flow yield is a little bit low, but the balance sheet is not a problem for this company at all, guys. Take a look at the balance sheet and you will see that we are sitting very pretty right now. Not that much debt to speak of, far more cash on the balance sheet and a decent amount of free cash flow coming in, $3-4 billion per year. Fantastic. And as per the growth prospects of the company, here's what we're talking about when we reference the cyclical demand. Pulled forward demand in 23 and 24, and now we're back to an expansion curve of EPS and back to an expansion curve of revenue as well. So overall, I'm very pleased. The valuation on ASML is relatively inexpensive for what it is right now, and I really love this lower location. If we come back down for some which reason, 650 to 600, I think it's a no-brainer buy. The company's hovering around its 200 weekly moving average as well, which very, very, very rarely gets tested. I myself have a few swing trade positions here. I think it's a great company for a long-term portfolio. Tremendous moat, tremendous competitive advantages, and down here the valuation can support some upside increases potentially. The midpoint of the analyst price targets is 900. So swing trade for me, yes, and also long-term portfolio, actually not a bad buy at all. That is everything for ASML. So that is earnings number one. Company number two we're going to be looking at is going to be Meta. So Meta coming in with their earnings today, and after the bell, they were up 1.85%. They absolutely crushed it, guys. Take a look at this EPS, 19% to the upside and 3% bump in revenue. Is the capital expenditure spending that they're doing, is it worth it for the brand? Let's have a look. Taking a look at Meta here, Meta shares pop after company beats on revenue. Fairly obvious, we just went over it. Beat on the top and bottom line. Now, there's what Mark Zuckerberg had to say. We now have a U.S. administration that is proud of our leading companies, prioritizes American technology winning, and that will defend our values and interests abroad. I am optimistic about the progress and innovation that this can unlock. I listened to the entire earnings calls, guys, from Meta, Microsoft, and also a portion of the Tesla one, guys. So I can say that he did speak with confidence on the call. Sales in the fourth quarter jumped 21% year over year. Net income grew 49% to $20.8 billion. That is the best. These are the best net income margins Meta has ever had, 42.9%. Take a look. Normally, the net margins are about mid-30s. This time, 42% margins from Meta, guys. Absolutely nuts. They expect the first quarter revenue to be in the range of 39.5 to 41.8. It was slightly softer than the expectation of 41.73 at the midpoint. The Meta AI chatbot surpassed 700 million monthly users, which was over the 600 million recorded in December. He expects Meta AI to reach 1 billion users this year. Now, referencing DeepSeek, he said there is going to be an open source standard globally. For our own national advantage, it's important that it's an American standard. So Mark Zuckerberg, once again, taking the stance of the rest of the big CEOs in the game right now, saying that this is a positive for advancement of technology overall, but that now they know they have a fire that is kind of lit under their butts. He didn't say that, but that's kind of what you have to discern from all this, right? They now have fires lit under their butts. So hopefully this will lead to some very healthy competition, which at the end favors you as the end consumer to get all of this tech a lot cheaper. Now, quarter losses on Reality Labs, the metaverse segment for Meta, continues to be a pain point for the company. They just keep dumping money into this. Good thing they have money to blow, but I mean, listen, they've dumped almost close to $20 billion of negative returns into this portion of the business. A lot of people want them to stop, and they don't have much to show for it, guys. Only about $3-4 billion of revenue total in 2024, losing a lot more money, guys. I do not think this will ever be a profitable segment for Meta, so hopefully they can kind of come to terms with that on their own. I've never been a big fan of this venture by them. I think they're just throwing good money after bad at this point, guys. Nobody talks about the metaverse anymore, truly. It might be something, but I think we're still about 10-15 years away from that. The company also reiterated that it would invest between 60 and 65 billion in capital expenditures to fuel the AI ramp of infrastructure. It's possible that we'll learn otherwise at some point, but I think it's just way too early to call that, saying that whether or not the investments are going to pay the fruit. I would bet that the ability to build out that kind of infrastructure is going to be a major advantage for both the quality of service and being able to serve the scale that we want to. Now, obviously, some of the computing power is going towards AI, but a lot of the computing power is just going to process all the ads, all the user inputs, all the tons of data that Meta gets from its consumers and commercial clients. That is what's going to be processed in the data centers, more so than just a nice AI chatbot, right? But overall, he did say that they're working on an AI engineer, which is going to be able to write math and write code and designs Meta's code for itself. So they're making an AI which is going to be able to code to make AI better. It's AI inception at Meta, guys. I was pretty happy about that. Daily active people, they call them people now instead of users, came in at 3.35 billion, up from 3.29 last quarter and above the estimate of 3.32. They did not provide a revenue outlook for 2025, contrary to in the past. And now they said the total expenses for 2025 should come in between $114 to $109 billion. The company plans to hire workers for infrastructure, monetization, Reality Labs, generative AI, regulation, and compliance. So Meta growing the headcount year over year. They're going to hire a couple more people, but I think their absolute cap is about 78,000 from what Mark Zuckerberg was talking about in 2022. So all in all, guys, a very decent quarter from Meta. Very nice revenue, record revenues for 2024, record net margin profits, but also record amounts of capital spend to fuel the AI infrastructure ramp, with possibly measurable profitability and efficiency ratios improving over the next 2, 3, 4 years because of the money that they're spending today. I'll remind you, they're not spending $120 billion for a fancy chatbot, guys. It's really just to future-proof the company to be able to handle the sheer amount of volume of data that they get from all of their respective platforms, whether it's WhatsApp, Facebook, Instagram, and everything in between, essentially, right? So moving into the valuation here at $676, is it a good deal? Well, forward P is about a 29.8, and the PEG ratio at 676, measuring 12% revenue and 13% EPS growth over the next few years, is a 2.3. Now, this company I was saying was a decent buy below 600 and even slightly above 600, but you can see when we push the higher end of the range towards the 700s, the PEG ratio is kind of running a little bit away from us. So is Meta a good buying proposition right now? Well, my answer, guys, it really depends on the time frame. If you have a 5 to 10 year time horizon, then sure, you can probably absorb the fact that you're not buying the best possible price. But if we want to buy the absolute best possible price, a retest of, in any conditions, the lower 600, 630 down to about 600, that would mean that the PEG ratio would be a more manageable one, closer to 2, and would give you a little bit better of a free cash flow yield, because right now it's about 3.05. You want to see above 3.5%, but still, the valuation of the company, a little bit rich, but Meta is looking fine. If we have shares from all the way back here, I see no reason to sell. It's just buying it up here. You're really just not getting the best deal, but fantastic quarter for Meta. No red flags that I could see whatsoever. So that is it for Meta. So that's earnings number 2. Now let's move into earnings number 3, which is going to be Microsoft. So Microsoft also coming in with a very big quarter, and Microsoft has been a little bit of output constrained recently. They have a ton of new AI offerings. They have fantastic products overall. Microsoft is really, one of the most solid companies in the world. However, they've been having supply constraints. They cannot get the products out fast enough for the demand that they have. That is a very good problem to have, but sometimes when you say that on an earnings call, it can rub analysts a certain type of way. And that's kind of exactly what happened today. Microsoft down about 5% in the after hours. But I mean, the growth numbers, guys, are fantastic. You'll see when I tell you why the stock is down 5%, it's almost the same as the last time that they had earnings, that they were also down 6%. And I called the bluff there too. So let's take a look at Microsoft. I'll remind you that Microsoft here, one of the best companies in the world, slip on weak quarterly revenue guidance. Well, how weak? I'll let you know, and you'll see, guys. Lighter growth in Azure cloud computing services than expected. The company also gave a disappointing quarterly revenue forecast. We'll see how disappointing it is, right? So double beat EPS and revenue, beat this quarter, but the guidance was the issue here. With respect to guidance, Amy Hood, the CFO, called for 67.7 to 68.7 billion in third quarter revenue, compared with the estimate of 69.8. That is almost just under a 2% miss on revenue. Not saying all of revenue is going down 2%. It is a 2% miss on the guidance expectation. So it literally means if Microsoft is growing revenue at 12.5% per year, they literally are now only growing at 12.35% per year, which is like almost the same thing, guys. You know what I mean? So first quarter of the new year, a little bit light, and the market didn't like that, so it sold the stock off initially in the first batch of sell-offs here because of that slight miss on guidance. This was in relation to the output constraints, and we're going to get to that in just a few short moments. Microsoft's revenue grew 12.3% year over year, net income of 24.11 billion, 34.6% net income margins, guys. Microsoft has always had very healthy net income margins. Take a look down here. Right across my shoulder. On an annual basis, they've just been increasing net margins every single year over time to around the mid 30% range right now. So Microsoft in its current earnings landscape, sitting at about a 34.6, is in line with historical norms, but you can start to see a little bit of the impact of the spending that they've been doing on the infrastructure build out. Now, the Azure Intelligent Cloud segment contributed 25.4 billion in revenue. That was up 19%, but below the consensus of 25.83, missing, guys, by literally a fraction, right? Almost a 1% miss on cloud. That's nothing. Revenue from Azure and other cloud services jumped 31%, down from 33 last quarter, but has made 13 billion from AI over the course of this year, which is absolutely fantastic. I would argue that Microsoft is monetizing their AI ramp the best out of all of big tech so far. So that was notable to me, but this number 31 was lower than the street estimate, which was 31.8. So big, huge miss by Microsoft, right? All these misses are very tiny. But similar to the last three quarters, unless you show perfect earnings to Wall Street, you guys have seen what's happened to companies over the last 2-3 quarters, right? Unless you are perfect, you just go down. Moving on further, analysts said that they'd been looking for 31.9 on Azure or 31.1. So there's your miss on Azure. For the third quarter, Amy Hood, the CFO, sees 31 to 32% in Azure growth in constant currency as they address execution challenges and continue to endure capacity constraints. They cannot get the product out fast enough, guys. It's the best problem you can have, but it does hurt a little bit in the short term. They said Azure growth would accelerate in the second half of the fiscal year. Now, moving on further, guys, I want to take a look. I've highlighted a few other segments, but we can just look at these visually. Look at Azure, still low 30% gains, which is super healthy, guys. This is the most recent quarter. Dynamic products and cloud services, which is very good segment as well for Microsoft, 15% growth. Microsoft 365 commercial cloud, 16% growth. 365 consumer products and cloud services, that's up 8. Search and news advertising, 21%. A highlight of the company that nobody talked about. OEM services, so their licensing of Windows, 4% to the upside. And Xbox content and services, only up 2%, but a little bit of normalization from last quarter, which was a fantastic order for Microsoft overall. So here's how it looks, right? The productivity in business, Office, software subscriptions, LinkedIn, 13.9% up. Personal computing, Windows, Bing, Surface, and Xbox, 14.65 billion in revenue over the 14.29, and sales of devices and licenses from device makers were up 4%. So overall, guys, this plus the heat map down here to showing all of Microsoft's segments, very solid quarter, guys. You would be very hard pressed to, other than the slight misses on guidance, there's nothing wrong with this quarter right now. They invested an extra 750 million in AI, OpenAI during the quarter, and they said OpenAI has a lot more coming soon. So stay tuned, one of Microsoft's very close partners. So overall, guys, we know already their stance on DeepSeek. Satya Nadella said that it would only increase the demand for AI, which a lot of other people have reiterated as well at the same time. So there's your earnings on Microsoft, guys. Very slight misses on guidance, but overall, most segments of the business operating very nicely. No real big lagging sectors overall. Just a company that is extremely well diversified with a very solid balance sheet. I mean, Microsoft's balance sheet, guys, I mean, is the stuff of legends right here. Look at the amount of debt they have versus the amount of free cash flow per year. It's not even close, right? Yes, they do have debt, but they bring in so much cash to the bottom line. Cash and cash equivalents right now, 18.3 billion. So perfect balance sheet in my opinion. And when you look at the forecasts here for EPS, such a smooth EPS ramp curve and such a smooth revenue ramp curve as well. No problems for Microsoft as a business. As a matter of fact, the average analyst price target for the next 1 year of trade is about 510. So Microsoft right now under the analyst price targets overall, and right now currently at 421 at the 200-day EMA too. Where do they stand on valuation? So let's have a look. Revenue and EPS growth, very healthy mid-teens. So 12.5 on revenue, 14.5 on EPS. Very solid, guys. This is a $3 trillion company growing at double-digit revenue and EPS. Microsoft's a mature company as well, so that is fantastic. At 415, they stand at about a 31.72 forward price to earnings ratio. Historically, Microsoft has traded in the mid-30s for the most part. So at 31, guys, it's not rich, it's not, it's not expensive, it's not cheap, it's kind of right in the middle with where they've been historically trading, at least over the last 5-6 years of time. That being said, it is somewhat of a decent deal here at a 2.18 peg. You're very hard pressed to ever find Microsoft, guys, under a 2 peg. 2.18 is not that bad. Free cash flow yield could be a bit better at 2.4%, but Microsoft does trade rich just because of how solid the balance sheet is, how predictable the business model is, and how constant those EPS and revenue appreciation curves are. So it does get the benefit here of a higher valuation, such as companies like MasterCard, Visa, Costco. They all get a bit higher valuation or are allowed to trade rich for extended periods of time by Wall Street because of how consistent their business models are. And you guys must know by now, in terms of the TA, guys, $415 to $400 for Microsoft after a 1-year range of accumulation while improving fundamentals, while being supply constrained as well. This 1 year's worth of accumulation period, I do have a very bullish bias for it to break to the upside at some point in 2025. Probably sooner than later. So I'm a big fan of buying Microsoft down here for either some long-term shares for your portfolio if you like the company, or even some possible swing trades into 2025 because growth will be accelerating all throughout the year, but most notably in the second half. So I think that Microsoft could be a very good bet for the year. All in all, such a well-rounded and solid company. So that is everything for Microsoft earnings. And then now let's get into the most fun one of all, which is going to be Tesla. So Tesla coming in after the bell today with their earnings. And unfortunately for them, it was a double miss. They missed on EPS by about 5.7%, and they missed on revenue by also 5.7%. However, the stock is trading higher at 4.34. Even though they missed numbers, even though that the deliveries are down, revenue is down year over year, even though they're reducing the price of their cars, the stock is somehow still up, right? So let me explain as to why. There was some notable developments by Tesla this quarter, which we should mention. So Tesla fourth quarter results missed the estimates as automotive revenue drops 8%. So I'll explain what happened here on Tesla. The revenue increased just 2% from a year ago. Automotive revenue fell 8%. So once again, reiterating, guys, we know that Tesla has all these great plans for the future in terms of robotics, AI, full self-driving, the energy storage business. But for now, the main bulk of their business remains the automotive segment. And we know this is not Tesla's fault for declining year-over-year sales. We've seen this from all the major OEMs over the last 2, 3, 4 quarters as they battle with higher interest rates, and the demand for cars from consumers has been going like this. Now, Tesla has been doing several things to counteract that lack of demand, such as reducing prices and also subsidizing interest rates for financing and leases, meaning that if the market rate at a bank is 5%, 6, 7% for an auto loan, you've seen that you could get a brand new Tesla on their website financed by Tesla, sometimes depending on the model, for 1% or 2% interest rates. Tesla is subsidizing that cost from their pocket to get the cars off of the lot. Moving on further, operating income declined 23%. That is a big number. The company cited reduced average selling prices across its all of its platforms as a major reason for the decline here in their revenue numbers, which makes sense, guys. They're trying to stimulate demand by reducing prices. It's the best thing you can do. What's the flip side? You don't change prices and you end up with a bunch of cars collecting dust off the production line. Not the best situation, right? Net income dropped 71% from a year earlier. Or 66 cents a share. I'm glad they included this graph because I would have included it anyways. This was an outlier where they recognized some taxable event essentially for some investments that they had made. Otherwise, though, we can see a net increase here in net income over the last 4 quarters. So you can argue that Tesla is managing the current environment the best that they can with the cards that the macro environment has given them. Increasing net income over the last 4 quarters is a very decent thing to say, all things considered, while reducing the price of their cars. So how are they able to drive more net income to the bottom line while reducing the prices of their vehicles? Well, Tesla has made several advancements here, the most notable of which through their quarter was this line right here. Affordability remains top of mind for customers. They continue to review every aspect of the cost of goods sold per vehicle, meaning the production process of the car. How can they make it cheaper and more efficient? As a matter of fact, this quarter is their lowest ever cost of goods sold at under $35,000 per vehicle. So yes, they're charging less money per car, but the cost of producing each car is going lower. Now, obviously, the cost of goods sold is going down at a less fast pace than the price decreases are going, but still, there's a little bit of offsetting factors here, but nice to see Tesla once again, as I said, doing the best they can with the cards they've been dealt from the overall economy. The operating margin at the quarter came in at 6.2, narrowing from 8.2, which is a pain point for Tesla. We know that their margins have been coming down over the last short period of time. You can see operating margin here going from the mid-teens all the way down to the single digits, and here was no different. 6.2% is one of the weakest operating margin numbers that they've given in the last 2 years of trade, and in terms of net margins as well, they were a little bit weaker than expected. Moving on further, hefty discounts. To end 2024, Tesla offered a wide range of discounts to inventory of vehicles and special discounts as well. In China, they cut the prices of their Model Y SUVs too. So once again, moving in line with what I was talking about, right? Now, moving on further, in terms of the Tesla quarterly revenues by segment, look at the energy generation business, guys. It is gaining more and more of a total share of revenue, and so is the services division of the business as well. Very nice expansion. So although the blue line, you can see here, automotive revenues have largely been flat or slightly declining here for the past 8-9 quarters. But what is making up for it? Advances in services and advances in energy generation and storage. So you're starting to see Tesla diversify away from the legacy automaking business and attack the services segment, the energy generation segment, and of course we have future plans for the robotaxi network as well. So the future is looking very bright for Tesla. They're starting to offset some of the revenue declines from their car business with all the other businesses they've been working on for the last 10 years. So once again, nice to see Tesla doing the best they can in the current environment. So Tesla didn't give explicit guidance for 2025, but Elon said we expect the vehicle business to return to growth in 2025. They expect to unlock an unsupervised FSD version this year, and they expect to begin launching the RoboCab essentially later this year in parts of the US. So launching unsupervised full self-driving as a paid service in Austin in June as well. Elon said we already have Teslas operating at our factory in Fremont, and we'll be doing that at our factory in Texas as well. Moving on further, Musk said that there's significant interest from a number of major car companies about licensing the FSD technology, which has been a thesis by many Tesla enthusiasts and shareholders over the years. Now, Elon Musk is actually saying that there is notable interest to him directly for the technology, but he did not name any companies specifically or offering a specific timeline. But you can pretty much take it to the bank. If Elon's saying that, I know sometimes he puts on a little bit extra sauce, but I'm pretty sure people are reaching out to him to derive possible partnership agreements for utilizing the FSD technology. The energy storage business up 113%. I'll show you that in the shareholder deck, guys. Free cash flow, $3.6 billion. Very healthy free cash flow numbers by Tesla. $7.5 billion increase in the cash pile for the company. Now take a look at this, guys. These are the highlights, right? So you can see operating margin has been a little bit of a problem. GAAP gross margin has been coming down as the price decreases, although they are being offset slightly by less of a cost of goods sold per vehicle, they are still coming down. So that is a downtrend, yes. But look at the free cash flow. Free cash flow, yes, is coming down off highs, but still maintaining at a very decent rate, right? It's not as if they're cash flow negative, so still maintaining as best as they can. And cash equivalents, this is the highlight of the business, continuously growing the stockpile of cash up to $36.5 billion. They have enough money to weather any storm that could possibly be thrown at the business. Moving forward, now look at this, guys. Supercharger connectors and supercharger stations, both having notable upticks. One of the best networks in the world, arguably, right? Look at the gigawatts per hour storage, up to 11 gigawatts, guys, almost doubling. That's absolutely massive in terms of the energy business, in terms of storage deployed, right? That was for the quarter. This is for the full year. Look at the full year. Look at the energy storage business ramping up right now, 114%. So expect that revenue to continue growing, guys. I mean, all in all, for the quarter that Tesla had and the macro headwinds that it's having, I think they're doing quite well. A lot better than other OEMs can say, that's for sure. Now, in terms of the overall summary for Tesla, guys, well, of course, there's some short-term negatives that we've addressed already. But just to sum it up, slowing sales growth worldwide. That's a tongue twister. That's not just Tesla, it's all the car brands. USA price cuts equal lower margin. We saw that 20% to the teens. China price wars as well. We saw that reducing prices of the Model Y there. And they stimulated demand in Q2 and Q3 with 0.99 and 1.99% incentives on models. So Tesla eats that in the margins, unfortunately. And they're subsidizing the cost of new vehicles for new consumers, which is good. Long-term positives, solving FSD is a multi-trillion-dollar robotaxi business. This is true. One of the most extensive charging networks worldwide, continuously expanding as I just showed you in the earnings slides. One of the most advanced robotics technology divisions worldwide. This is true. Think of the Optimus robot, AI, and a supercomputer play, right, with Dojo. Solar and the energy storage expansion long-term, they've been making great strides in that. And I showed you how well they're diversifying the portfolio of their revenue. But obviously this takes time to diversify, right? But they are moving in the right direction. That's what we want to see. Are they moving in the wrong direction or the right direction? And they're now moving in the right direction, so that's good. One of the 3 worldwide positive free cash flow EV makers. This is true. Nobody else in the world manufactures EVs at a profit, guys, per car at least. There's only 3, BYD, Li, and Tesla. So nice to see that Tesla is the only North American manufacturer able to do so. And the cost of goods sold efficiency is offsetting the price cuts somewhat. So all in all, where does this leave us in terms of valuation? This is where you are either a long-term Tesla shareholder believer or you think the company is just a car company and is going to just go down and is way overvalued. You can make an argument either way, and either of the arguments will be logical depending on your time horizon as an investor. So at $407, the P ratio is 123. With EPS growing only 20% per year, that leaves them at a forward peg of 6.1%. Now they can grow EPS further, but this is the consensus right now. It's weak because of the macro outlook, and we do not have the gains with the robotaxi network either. So we can use 20% as a baseline, but even if you double this number to 40%, you would only cut this peg ratio in half. It would still be trading at a 3 peg. Suffice to say, Tesla is very expensive. If you preview for the next 2-3 years when they do not have a scaled Optimus robotics pipeline coming out where everybody has a personalized robot, that's like 5-10 years away. Robotaxis, they will be rolling them out this year, but that is a 2-3-5 year rollout plan to be rolled out at scale and generate profits at scale. So for the next 3 years, the company is indeed highly overvalued. I will be reviewing these numbers as the years progress, but right now, for what they have, which is energy storage, services, and automotive business, right? We can project all we want in the future, but right now, the business that they have, it is very, very expensive, Tesla. The fair value for what they have right now is around, in my opinion, $250, $240. That is fair value in my opinion. However, if you have a very long-term time horizon and you start factoring in all the positive revenue sources in the future, licensing FSD, robotaxi network, eventual advancements in production capacity. Tesla has some of the best factories in the world with some very important patents on the production process. They can sell those to other people too. Tesla can sell a bunch of its intellectual property, whatever it develops, to other companies because it's making such nice moves in technological advancement, and that is worth a lot of money, guys. So if you have a long duration time horizon, then you can argue that Tesla is actually fair priced when looking at a longer 5 to 10 year free cash flow, discounted free cash flow model overall. That being said, Tesla could represent a decent swing trade opportunity. We'll look at that later in the technicals, but entry would be roughly here, stop goes below there, and we're targeting the highs. If you invest in the company here, guys, you cannot have a 2-3 year time horizon. The valuation is way too expensive for that. If you're investing for the long term here, the long term for you looks like the next 5 to 10 years for this price to make sense. So that is everything for our earnings recap, the Powell recaps. I tried to spend as little time on these as possible while still doing a good summary, guys. So hopefully you appreciated that summary. Now let's dive into the indexes in terms of the TA and our big tech names as well. I'll try to keep this rest of the segment under 20 minutes and keep the video around a cool 1 hour. But there was a lot of stuff today, guys. This week is very big. So apologies for the videos, the time length. You can obviously see I'm making an effort to not kind of, beat around the bush. But here we are, right? So moving into the SPY, we can see that we really have not lost any major levels over the course of the day today. The analysis remains the same. Huge daily downtrend here, nice engulfing move, and now holding the level of support even after today's Jerome Powell and the big tech earnings. You can see that we are positive in the after hours. We will see how they open tomorrow in reaction to the Microsoft, Meta, Tesla earnings as well. But overall, the bulls are looking nice for a daily higher low and possible further trend expansion moving beyond the all-time highs. However, if we break 594, that will be a daily downtrend, and I will remind you, we will be going into some form of weekly consolidation, hunting for a weekly higher low, anything above 575, weekly higher low for further trend continuation. But as we continuously remove these volatility catalysts, no more Powell, no more big tech earnings, then the market can operate on price action alone with the 2025 forward guidance for the markets from banks, from tech, from other companies alike, which so far has been quite favorable. So I do believe in the economic expansion for 2025, and I do believe the markets are not showing any major red flags as of just yet. So I do remain overall positive on the S&P. Remind you about seasonality. January and early February can be bumpy, but towards the midpoint of March, that's where we usually embark on the spring rally that usually lasts until the early stages of May. Fear and greed still remains at a neutral index, but overall, now that we've removed a lot of volatility and uncertainty catalysts, the market could start to find a little bit more stable footing, especially as we move through these big tech earnings more and more. Now, moving on further here, guys, into the Qs. The Qs also not down that much today, 0.19, same concept. Daily downtrend, nice engulfing move. Now the bulls have created a ton of space. They are looking for the daily higher low, which they got on the Monday open, and now looking for the continuation of a possible daily uptrend up to the highs of 535. If we get rejected and set the lower high into lower low, well, step number one, they have to hold this resistance area, guys, 515 to 500. Look on the futures chart. You see this area very well and clearly defined. Here is the Powell candle, and we have arguably refused to close below, much below this area, below the 2800 on the futures, refused to close below it. This is a very big level for the Qs. On this chart right here, this is 515 down to about 510. Crucial to hold. If you flush this level, daily downtrend, and you are going into weekly consolidation, and you need to be very mindful because the lows are at 500. More lows mean the weekly uptrend shift potential is now undone, and we may look to just dive into lower levels. I would think that would be a buying opportunity, but we will tackle that if we come to it. As of right now, no major red flags. Moving into financials, up 0.16%. Overall, though, financials a little bit overbought now on the daily time frame, and on the hourly time frame, you can see they're struggling to push net new highs. We will see if Visa and MasterCard earnings do it tomorrow for the financials index, but even if we do start consolidation here on the hourly, just remind yourselves who's in control. Anything above 47.16, looking for a daily higher low for possible further trend continuation. It's been a very nice engulfing move. And even if we lose this into daily downtrend, you're just looking for a weekly higher low, anything still above 47, looking for that weekly higher low for further trend continuation. Tons of space for the bulls, tons of support levels below us, which is 49 to roughly 48.5, and the 12 EMA there as well. No red flags on this chart. Moving into healthcare, healthcare also no major red flags, even though we have come into an equal top location. Where did we come from? All the way down there with this gorgeous daily uptrend, looking for a daily higher low, anything above 139, looking for that daily higher low to maybe push a little bit higher. However, if we cannot do it, pull back too much, end up in a daily downtrend, is it the end of the world for healthcare? Not really. Take a look at the context on the weekly. Sweeping weekly downtrend, nice 100% engulfing move, tons of space off the lows now, 136 to set up for even a weekly higher low for a possible weekly uptrend recapture attempt by the bulls. So they're not out of the woods yet, but the bounce has created a ton of space and looking fairly decent. The MACD on the weekly is possibly crossing after being very weak since the month of September, so it could be a notable shift in the healthcare sector. We will take a close monitor on that sector in the next few weeks of trade because the weekly uptrend shift is going to possibly mark the monthly bottoms and possibly also mark a possible retest of the all-time highs at some point in 2025, as we've just used all of this resistance as support for the bulls, reacting nicely. Now we get to see, can they follow through and change the trend? Moving on to SMH now. So SMH up 0.71% today, but still a relatively overall weak day for the markets. Once again, trapped between two levels. Overhead resistance 260 to 250 and below support 232 down to 219. If the markets continue being weak on semiconductors, I will continue to play short puts under the market on my favorite companies, namely NVIDIA, TSM, and Broadcom. For the rest of the other ones, such as ON Semiconductor, Texas Instruments, Micron, and other companies like that, guys, they're just too exposed to the consumer electronic business and the auto business as a whole, and those should not be recovering much before the second half of 2025. So I am focusing only on the data center heavy infrastructure ramp companies, namely the ones I just described, NVIDIA, TSM, AVGO, and ASML alike, but reacting nicely from the 200-day moving average, which usually has been a decent buying proposition for the SMH over the past roughly 2 years of trade, but overall directionless, trapped between two levels, need to see a notable move by the bulls, recapture the daily uptrend, and make a move and try to claim this resistance range, which has been plaguing us for the last 4 to 5 months. Moving into the Russell now, the Russell down about 0.2%, not all that bad of the day. I'll remind you what we're trying to do. Daily downtrend, nice engulfing move. The bulls are trying to set the higher lows and go for the daily trend change. We will see if they get it, because if they don't get it, guys, and they just set a lower high into lower low, daily downtrend, I think you guys know what's going to happen. We are trapped, same thing as semis, between resistance from these guys, which is now these guys here, and support below, which is 217 down about 208. If we do come back and revisit, I will possibly explore the opportunity to buy some of the Russell down there for a swing trade for small caps. But as of right now, small caps are being held back by one key thing, which is the heightened 10 and 20-year yields. Small caps do not like high interest rates, and until we start seeing some more meaningful drops in the 10 and 20, the Russell can be somewhat of a very bumpy trade, to say the least, right? So until we get a clear break of one of these levels, either a breakout retest and run, this is an opportunity. The breakout retest, that's an entry for continuation, or a retest of support, that will be an entry. Buying it right here at resistance for the daily uptrend break can be a decent opportunity, but in my opinion, it's not the highest probability trade. You'd rather wait to see them mount above this level, use it as support, and then go for it. That is a higher probability trade, in my opinion, rather than buying into resistance here. We are not too sure what you're going to get. Moving into the Dow Jones now, down about 0.31% today, but everything is good on the Dow, guys. Daily downtrend, huge, one single big, large daily engulfing move. In the event we pull back, keep it on the hourly time frame. If you lose the hourly uptrend, which will be a break of the lows of today, if you lose that into tomorrow, daily hourly downtrend starts and daily consolidation is underway for the Dow Jones. Keep in mind, guys, looking for a higher low, anything above 41.9, looking for a higher low for further trend continuation. This is not a higher low because we never lost the hourly trend. This was the Monday disaster. They recovered it immediately, guys. So all in all, no candle closes down below there, so we cannot say this is a daily higher low. This is one big move, looking for it. If ever we fall off daily downtrend, understand who has a lot of space here. The weekly bulls, anything above 41.9, looking for a weekly higher low for further trend continuation. This one looks exactly like XLF. on the weekly, guys. Breakout, retest, and possibly reset the uptrend. Same for the Dow. Breakout of this zone down here. Possible retest of the 12 EMA and the support zone, which is 43.3 down to 43K, and maybe run for the early stages of 2025. That is your index rundown. Hopefully you appreciated that. Now, in terms of Bitcoin, we'll cover yields tomorrow because they didn't move too much. In terms of Bitcoin, well, Bitcoin was actually doing quite nice today because Jerome Powell, in all his wisdom, gave a very good hint for crypto right now. He was actually in favor of regulating crypto. And he said that if households, individual households, choose to be in crypto, that is their own choice. But it would be nice to see that they can have some regulation behind them to, have a more secure form of an investment overall, when you know that there's some regulation behind it overall. So that was something that Jerome Powell has never said before. That was kind of him acknowledging that Bitcoin and crypto can have their purpose as assets in people's portfolios if people choose to hold them. He just wants people to be safe. And in other news as well, right, in terms of Jerome Powell with crypto, although they can't own any at the Federal Reserve, of course, he did say that the Fed has been in discussion with administrations, this administration as well. The Fed has been discussing the implications of crypto in the markets moving forward. So you can already see that there's more and more progress being made of making crypto more mainstream and adopted by not only regular people such as you and I, but not only us, but also by commercial and institutional entities, which we've already seen, and also by governments as well. So Bitcoin performing nicely today. This, guys, is a breakout retest trade, right? Yes, daily uptrend was somewhat challenged here, but in all reality, if you smooth this chart out, what does it look like, guys? It is possibly a weekly breakout retest of the support and run. This is what it looks like. This is kind of a daily bull flag right now, reacting nicely from support 101.5 down to about 98. If we hold now and bullish into the rest of the week, I would not be surprised if we can see an expansion leg from Bitcoin here, taking us into 108, 110, looking good on the weekly for that. It has always been a weekly uptrend. We are just looking for some follow-through continuation. We will see if the bulls can get it, and if we don't, we'll keep an eye on the loss of support. If we lose this support, we are heading right back down to the gulag, lower end of the support range. 92 to about 88 is that big support, but we'll see if Bitcoin can actually get it done. The rest of crypto we will cover on the Friday session because I have only so much time today. But just know, guys, that the rest of the altcoins will only start moving when Bitcoin pushes an actual big level. That's why you don't see much movement in Ethereum. You don't really see much movement anywhere across the board, even though a lot of altcoins had a good day today after Powell gave a hint that, they were starting to be more friendly towards crypto overall. Now, moving on to Apple. So Apple having a good day today, 0.46% today. And we know the context was a daily downtrend into a nice new daily uptrend shift by the bulls. Cross of the MACD on the daily looking good. They have earnings, however, next Thursday. So we won't be able to get so much data before they have earnings tomorrow. What am I saying? The Apple has earnings tomorrow, guys. My bad. We'll cover it on the channel. So it's going to be impossible to derive the short-term price movements of Apple leading into earnings. The best thing I can do for you guys is give you guys the expected move, right? The expected move for Apple for tomorrow for their earnings is about 3.73%. So 4%, let's call it, to the upside. That would put us right back all the way to about 250, close to the all-time highs. And to the downside, it puts us right about 230, where we were a few short days ago. One thing's for sure, though, guys, we have a lot of space off the lows, 220, right? So we have a lot of cushion here. I would be highly surprised if Apple comes down tomorrow and tests this location. If that's the doomsday scenario, understand this is a fairly big level of support down there, 225 down to 215. And overhead, we're looking for the continuation of the weekly uptrend because we did not lose it. Equal lows, so possibly looking for the continuous expansion, but it's all going to be about earnings. And if you want to know what to look at for earnings tomorrow, guys, look at this right here, guys. It's all going to be about how can Apple drive more revenue to the company. So any guidance on revenue, any guidance in terms of the product refresh cycle from 15 to 16 for the iPhone, or how they've been receiving new orders of their new Mac Minis, their new suites of M3 laptops and M4 chip MacBook Pros as well. All of that combined, we have to hear from Apple. So if you want my opinion, guys, I think they'll have a good quarter, but I think revenue growth will still be a little bit of an issue. I'm just not too sure how Apple or how Wall Street will react to the data. But one thing's for sure, if we do come back down here, guys, I will be also looking to possibly play some short puts around the 215 mark. Moving into AMD now. So AMD having a decent day today, 2.79, but we know Yeah, bounce is nice, but it's not the end all be all, right? We know that a bounce can be had, but until they convert into a daily uptrend, it's just a bounce looking for a possible lower high into lower low. So as of right now, the bounce size is not significant enough to say that the bulls have a lot of space to reverse this into a daily uptrend. AMD has earnings next Tuesday as well, so we're running out of trading days before their earnings. But before earnings, you would like to see the company at least get as much of a distance as possible between us and these lows if you want to kind of insulate us from a potential drop. That being said, everything's in a downtrend right now. The monthly is in a sweeping monthly downtrend. The weekly is also in a big weekly downtrend as well. And the daily, well, the daily is also in a daily downtrend. So we're waiting for the bulls to at least get a daily uptrend in motion. I don't know if we'll have the time to do that before they report earnings. That being said, below support is 112 down to 100. I think max pain for AMD is in the lower 100. So we'll see. I'm not going to play this one much before earnings. I'm very confident in the valuation of the company and the thesis that they'll be able to garner 5 to 10% of the data center revenue share from NVIDIA, essentially. Well, not revenue share, but market share, taking a little bit away from NVIDIA. We know they're going to be second place, guys. That's not the point. The point is that they're going to be recognizing revenue and EPS and margins that they've never had before in the company. This is the year of expansion for AMD on EPS and for revenue as well. So curious to see the guidance from this company next Tuesday after the close. Moving on to Amazon right now. Down about 0.45%. Not the worst day for Amazon overall, but just, not a fantastic day either. Just kind of holding their all-time highs. They have earnings next Thursday along with Google earnings as well. So Amazon, we know, nice daily uptrend, possibly looking for a daily higher low. Anything now at this point above 226 for a daily higher low for further trend continuation. And if we come back too much, we have some nice support down here, 229 roughly, down to about 225, and confluence with the 12 and 26 EMAs. The daily chart is looking fantastic for Amazon. They got a little bit of a hit after hours because of Microsoft's slight miss on cloud growth. We know that Amazon is the biggest cloud provider in the entire planet, pretty much. So we know that that number hit Amazon a tiny little bit, but we'll see where Amazon's own earnings or what they have to say about their cloud growth on their own for AWS. On the weekly, though, the weekly is looking picture perfect for Amazon. Stair-step pattern to the upside. Weekly bull flag and now expansion. So even if we do pull back hard over the next week because the market's going to a little bit of a tantrum, who knows, right? Well, tons of space, guys. Anything above 216, looking for a weekly higher low for further trend continuation. But I think Amazon may be slightly muted leading into its earnings. I'm not expecting some massive rallies to new all-time highs, but I'm not also expecting some massive declines in share price. Unless something truly crazy happens in the market, like a black swan or something like that, Amazon should be able to maintain fairly close to its all-time highs. I would only be interested in playing it, though, if it comes back down towards more of a 220. I'll let you guys know what I'm doing for earnings as we move closer to that time next week. Into Google right now, up about 0.06% today, and not so much affected by the after-hours earnings of other companies. That being said, Google is doing a great job of protecting its price action. Nice daily uptrend, looking for a higher low for possible further trend continuation. We have a little bit of resistance here at the all-time highs. We'll see if we can get through that. But look, Google's been doing a good job of maintaining between the 12 EMA and the 26. The bull is playing upside defense, right? Still accelerating to the upside, but we know that the pullbacks have been many over the past few weeks. That being said, support below is 191 to 188. I would like to see Google maintain at least this range of support, much before their earnings next Tuesday. So not that many days of trade left for Google either, but all in all, the company is shaping up quite nicely into earnings. I think they're going to have a good quarter. Moving into the weekly, for all intents and purposes, is somewhat of a sideways bull flag. They're trying to go for the weekly expansion. I just don't know the market is going to much allow it. I don't know if there's going to be enough buyers on Google prior to their earnings. Earnings might be the catalyst that sends them to new all-time highs, and that would be well warranted because the company is trading very, very cheap right now at a 1.343 peg, the cheapest of all big tech. However, if the market responds poorly to good numbers, such as what we saw with Microsoft today, and we come down to the mid-180s, I think this is a very, very cheap valuation for Google, and I will be buying heavy in the event we retest the lower 180s after earnings. Moving into Meta right now. Well, Meta we already did, but keep in mind in the after hours right now, they are trading quite high, as a matter of fact, still about 692. They went above 700 temporarily, but about 692 right now. So a little bit higher than where we are. But look at the trend, guys. The trend is your friend, right? Sweeping daily uptrend on Meta. At this point in time, well, it's actually two legs right here. So at this point, any pullback looking for a higher low, anything above 605, looking for a daily higher low for further trend continuation, tons and tons and tons of space. And even if Meta goes into a daily downtrend from here, is that a big deal, guys? No. Who's in control of the weekly timeframes? We're up here at 690. It's the weekly bulls. Weekly higher lows have now been set and just looking for continuation of the weekly uptrend. At this point, anything above this range right here, anything above 597, let's call it 600 to 590, yeah, 10-point range. Anything above this support range, looking for a weekly higher low for further trend continuation. Where could the higher lows come in? Well, at max drawdown, you probably retest these guys down here, 630 to 620, but we will see. Meta is looking nice right now. But as I said, the valuation is a little bit rich. So buying call options tomorrow for Meta, a little bit extended daily overbought conditions as well. But on a pullback, if we establish some good levels of support on a pullback like we did here, right? They established a nice level, pulling back for a while. I might be tempted to play Meta for continuation the rest of the year. Moving on to Microsoft right now. A few more, guys, and then we're done. Microsoft, 1.09% to the downside. I mean, today, plus an extra roughly 5% in the after hours. So in the after hours right now, we should be settling right around 421. So overall, guys, Microsoft's been trading like a meme stock, right? In the past few days, down 8% on Monday, then up 8% yesterday, or in the last 2 days, bottom to top, right? 6%. Now down another, top to bottom, down to 420, 6%. They've been going up, down 5-6% almost on a daily basis for the last roughly 3-4 days. Usually you don't see that on Microsoft, but I really do love the company, guys. They're trading right around 420. So we'll see where we end tomorrow if they can recapture some of this dip. Not willing to say that they broke through this level because this is only after hours trading. For all intents and purposes, though, this support range is roughly 430 down to about 425. So we'll see what we can do. Prior resistance should still be support by the bulls. We do still have the support of the 200 daily moving average at 420, which has been curling higher. You can see the bulls have respected that. If for whatever reason we drop below, though, guys, 415 and under, 415 on a 400 is a very decent buy for Microsoft for a long-term portfolio or a swing trade. And I will be swing trading this one myself if we retest the lower levels. All in all, though, very decent earnings report from Microsoft, all things considered. And the chart is still looking fantastic. Sideways accumulation, 1 year worth of time, while improving fundamentals. Very decent proposition for me. Now moving into Netflix. So Netflix up 0.65%, but no real price action change, right? We're still looking for the daily higher lows for possible further trend continuation. So up here, we're in no man's land. I would like to see a retest of prior resistance, which is now going to be support, and a retest of the moving averages, which is roughly 930 to 902. Not sure we're going to get it, but if I want a swing trade, this is the level that I actually want for a retest before making a long position. Now, moving in further in terms of the weekly, the bulls still remain in absolute full dominance control. Weekly higher lows are set. And at this point, any pullback from Netflix, looking for a higher low, 824. Anything above that, looking for a weekly higher low for further trend continuation. And that's why I say it's a breakout retest on 2 time frames, not only on the daily for a pullback, but also on the weekly for a little bit of pullback and appreciation. Earnings were fantastic, I'll remind you. So nothing wrong with Netflix. It's just a little bit too rich for me to buy up here for a swing trade without a retest of the prior level. Moving on to NVIDIA now. NVIDIA down about 4.1%, up a little bit in the after hours though. They got a slight, now they came down. I was going to say they had a slight 2% boost. I guess they came down, but down, just consolidating right around the 200 daily moving average for the stock overall, which has not really been tested since early 2023. That is the weekly 50 EMA as well. It represents a decent level of support. 120 down to about 115 is the area. Now, I did play NVIDIA again today with some more short puts at 105, double dipping. Opened those yesterday, closed them, or opened them Monday, closed them yesterday, open them again down here for next Friday at 105. I'm very happy buying shares of NVIDIA down here. And that's just how I'm going to swing trade this one, guys. Writing short puts under the market at a level that I want to acquire NVIDIA stock. That being said, it is a very clear daily downtrend. And now we also have very clear resistance above 135 down to about 128. This box right here, which used to be support, is now resistance. So can we see further downside potentially? Yeah, but we're coming into support now, which we're bouncing out of, right? 120 down to 115. So we'll see how the bulls are able to manage. Can they get a nice bounce? Plow up higher now that big tech earnings are up and that big tech companies say they'll still be spending on NVIDIA. Can we plow through, reset a daily uptrend, or will we maybe be facing a little bit lower price action? I'm fine with either case scenario, guys. If we drop more, I'll be buying a little bit more NVIDIA down here in the lower 100s. But even now, for a little bit of a swing trade, guys, with some light size, like first entry here, second entry here, very decent proposition in my humble opinion. all in all, despite the big drop, I think the chart is not looking too bad. Moving on to Tesla. Tesla down about 2.26, but after their earnings, we know that they were up a considerable amount, roughly a couple percentage points from the close, right? An extra 4.5%, 5%. So looking pretty good. They should be up here right around the 420 mark. Nice number for Tesla. Elon likes to meme with that number a lot, right about here. So where does that put them, guys? Well, it puts them at a capacity to continue the daily uptrend if they can get a break of 435. But in all reality, we haven't really broken a level, right? We're still kind of oscillating between the highs and the support range, which is 410 down to 374. So all in all, the way that I'll play Tesla moving forward is, yeah, if you want to go for the bullish expansion, guys, you can, but the stop loss has to be below here, because if we blast through this level, we're heading to the lower level, 350, 330, right? So there can be a trade here with decent risk to reward. If you're targeting all-time highs, the risk reward profile would not look too bad. You're risking about, let's call it, $30 to the downside, and you're possibly looking to make maybe about $60 to the upside. So it is roughly a 2-to-1 risk to reward trade. Not that bad of a setup in my opinion, but I wouldn't go extra heavy on this one, myself personally at least. And if we're looking to write short puts, I'll continue writing short puts well below the market at the prior level to the downside. Happy for Tesla that they're up in the after hours, but we have to remember the short-term valuation is a little bit rich. And now before last, Palantir. So Palantir kind of acting as if nothing happened today, only down about 0.59%, very close to the all-time highs, but I'll remind you, they have earnings on Monday as well. I would be very surprised if Palantir just blasts through the all-time highs before their earnings, or just gets flushed before their earnings, guys. This has been a very nice pre-earnings run-up, but it's curious to see how much more they have left in the tank. That being said, we can notice a inverse head and shoulders here, which could lead to some more upside. But all in all, that's just a pattern, right? In essence, what we're looking for here is price action. Higher lows are set, looking for expansion. If we flush these lows, 73, that'll be daily downtrend into support below 72 to 70 bucks, and just more weekly consolidation in somewhat of the sideways range, very wide range of price action that Palantir's been in. But overall, guys, the bulls never lost control. Higher lows are set and you are looking for expansion. So curious to see what will be in store for earnings. I don't think this one will move much before earnings. And if you want to buy this one into earnings, it is completely up to you. But the big focus is going to be on whether or not they can increase this revenue expansion rate to justify the very rich valuation right now that they trade at. It's all going to be about, can they expand the revenue growth profile to accommodate the heightened valuation that they're now at? That's what a lot of people are betting on. Will it happen? That is what we have to see on Monday. Moving into SOFI now, down about 1.11, but for all intents and purposes, SOFI is doing a good job of holding up the range of support. Daily downtrend into a big engulfing move, looking for some daily higher lows and maybe some possible trend expansion. So nice engulfing move. That's what the bulls are looking for. However, if we get disappointed with a lower high into a lower low, what are we looking for here, guys? Well, you're just going to be looking for a weekly higher low, right? It is a very nice weekly move up. Arguably, this is sideways, slightly downside consolidation. You can argue it's a weekly downtrend. Yes, that is true. Looking for the new weekly uptrend to be formed by the stock over the next 3, 4, 5 weeks of trade. But all in all, holding the support range nicely. 16 to 14 is support. They are holding, and I will continue to possibly write some short puts at the below level. I do think call options is a play, but you might need to put a bit more time on them than you anticipate. Maybe December or June 2026. I think $20 is a fair target for SOFI. It's a little bit rich, but it is a fair target considering how fast they're expanding revenue and their EPS. I think $20 is fair. It's a little bit on the rich side of fair, to be quite frank with you. Yes, that is true. But do they have a good chance of doing it? Yes, they do. So I do have call options for that purpose, but I'm also not opposed to farming some premium down at the lower levels if ever we dip back down there again. So that is everything for today's video, guys. Apologies for the length this week with Powell, with earnings, everything. 4 earnings today plus Powell, so I had to do a big recap early on in the video, but I am making a notable effort towards making the videos shorter. I know some of you appreciate them, but for those of you that are new, that sat through this entire video, thank you so much, guys. And if you did enjoy it, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. I do these videos every Monday through Friday after the close. And lastly, if you have any questions on these earnings, on the markets, on anything you want, leave it down below in the comments. I'll be answering a ton of questions tonight. And lastly, guys, in the event that you guys want, I haven't shown the trades in a few days, but in the event, oops, that's not the trades, that's the account. there were the trades. If you want to take a screenshot, right? Nothing to hide. I'm going to show it on Friday anyways. But overall, guys, if you guys want access to the trades in real time, we made some good ones today. If you guys want access to all these trades, these are all the trades since the inception of the Discord. The green check marks are wins. These little targets are assignments for the wheel, most of which we've all closed at a profit for the most part. And the red little dots are small little losses. So these are all the trades from the inception of the Discord. Nothing to, there's nothing that's not in this page essentially, right? So looking pretty good in terms of our performance since the inception of the Discord. We do private morning live streams every Monday through Friday for about 2 hours at the open, where I trade live and answer all your questions as well. Throughout the day, if you missed a live stream, they are recorded and you can ask me all your questions in these chat rooms, and I'm always very fast to answer in the Discord. We also have private videos, which I derive, or where I give you guys all my advanced strategies, advanced wheel strategies, advanced leap strategies that I don't talk often about on YouTube for either small accounts or large accounts alike. And additionally, guys, you also get access to, well, a number of different things, but mainly also all my watch lists, all my TradingView watch list, the wheel watch list, the large account wheel watch list, the high conviction, high quality stock watch list as well that I don't show that often, and all the annotations, all the technical analysis, all my chart setups, and all of these earnings annotations that I do on every single ticker for probably over 100 different companies. You got all that as well when you copy my chart layout. So that is all, several things that are included in the service. But if you have any questions, feel free to leave me a comment down below. And if it interests you, well, of course, the link is down below in the description. Hopefully I see you in there soon. And if not, I'll see you back on the channel. That's it for me, guys. Thanks so much for watching again. I'll see you tomorrow after the close, where we get more big tech earnings. This time tomorrow, I'll be covering MasterCard, Apple, and Visa for the most part. If UPS and Intel do something crazy, I might cover them. But for the most part tomorrow, it's going to be MasterCard, Apple, and Visa. Going to focus on the biggest of the batch. So thanks so much for watching, guys. Take care. That's it for me, and peace.